My name is Alexander Gilles, and I'm the consultant for market education for First Metro Securities, a member of the Philippine Stock Exchange. Our guest speaker earned his Bachelor of Science in Mathematics from the University of the Philippines. He did a Master of Arts in Economics. Then he finished his coursework for a PhD Economics program at the University of Pennsylvania. Our guest speaker has lengthy experience as an investment banker. He was Vice President and Head of Capital Markets Asia at Citicorp Securities Incorporated in New York City. He was Managing Director for Asian Fixed Income at Citicorp International. Then he was Director and Head of Philippine Investment Banking at Salomon Smith Barney Asia Pacific. From year 2000 to 2008, he was Chief Representative of Citigroup Global Markets in the Asia Pacific, based in the Philippines. Our guest speaker then served as Chairman and Independent Director of the Philippine Stock Exchange from May 2009 to January 2011. He was named President and Chief Executive Officer of the Philippine Stock Exchange in January 2011. Ladies and gentlemen, please put your hands together to welcome Mr. Hans B. Sicat. Let's raise it a bit. Pressure taller.
Thanks very much, Sandy, and good afternoon, everybody. It's great to see a pretty diverse audience, and it's actually rare that I'm in front of a group of mining industry-related people. Although I would say it's a delight, given that we tend to kind of talk amongst ourselves in the financial circles, and when we talk to our colleagues and partners in the real sector, and the mining sector, of course, is a very important one, I think that it gives us a good perspective of what's happening around town and around the country. What I'm going to do today is give you a brief update, what's happening, I guess, to the stock market, in case you haven't been listening, and then talk a little bit about how the mining sector is an important part of the capital market. And I don't know whether we'll have time for questions later on, but I'm certainly open to having a dialogue. There we go. So just very quickly, for those of you who have been following the news, things in the Philippines have been doing extremely well over the last year and a half, and clearly the trends are also very good as we move forward. The monetary environment is one that is very benign, with low interest rates. And I think if you take into account that inflation has been quite tame as well, we are looking at all these indicators of credit upgrades looming, such that we are actually a step away from investment grade, depending upon which rating agency you talk to. And I think that the issue on our competitiveness ranking globally is that it's a trend that's been improving, could be improving faster. But generally, all of these taken together have created a series of, or a sense of high business confidence in the country, as well as the belief that there will be sustained economic growth as we move forward. Now, that's manifested itself both as a lagging indicator and a leading indicator in terms of the PSEI, which is the Stock Exchange 30 company index. And even as we've started the year with a great run, we are now up about 14 or close to 15%. And we have, in fact, breached this record high, I think 20 times now this year alone. Interestingly enough, if I take a look at some of the numbers going back, one can argue that over the past 4 years, inclusive, we've seen compound annual growth rates in this index climbing of about 30% each year. And if we take a look at our neighbors around the world, as well as our peer group ASEAN country exchanges, perhaps a good news to say that over the last 3-year period, dating from the end of 2010, you will see that the index, again as a reflection of the economy, has actually outperformed every other country there. And if we're looking at 2013, year to date, we are running second to Vietnam. Now, we've also seen a number of very basic indicators which, again, talk about and reflect the good news in the Philippine economy. And that is, or those are, increase in our market cap for various companies. You can take a look and see that market caps have increased something like about 15% or 14% in terms of the value of companies listed on the exchange. And actually, our average daily trading volumes are up about a quarter to roughly about 9.1 billion pesos per day. There was a time when we were trading at about half of that number, about 2.5 years ago. So it's actually been an incredible amount of activity on the stock exchange. Now, investors' appetite, including foreign investors' appetite for securities on the market, have also increased. And we've seen that last year, foreign investors were net buyers to the tune of about 100 or 110 billion pesos, which is roughly around twice the amount that they put in the previous year. This year, it's running about at a rate of a net foreign buy of about 34 billion pesos. Now, one of the things that underpin the behavior of the stock market today is the fact that there has been record issuance using the stock exchange over the last 2 years. Last year alone, we raised over about 219 billion pesos through the stock exchange. Those are IPOs, private placements, follow-on offerings. And that number, which is about $5.25 billion US, which is a significant number, was already 100% of the previous record, which was set the year before, where about 107 billion pesos were actually raised. So I think it's fair to say that this has been spread evenly around various types of fundraising methods with follow-on offerings, which mean that these are subsequent public offerings of companies taking the largest share of the transaction value. I'll talk about a few milestones that we have done in our own exchange as a business. And this is actually very important in terms of supporting the underlying activity in the market. First of all, we are committed to our market education program, which combines both a short-term and a long-term program of trying to upgrade the understanding of financial markets and increasing financial literacy through the country. We have established various regional centers and also have launched, if you take a look at our website, what's called the PSE Academy. So you can actually get an education about the stock market by just going to our website and utilizing a number of the, let's call it, programs within that website. We also, by the way, have established a Twitter account and a Facebook account. So for those of you who are a little bit more social media savvy, please do follow us on these social media. On Twitter, I think we have about 7,000 followers and counting on our Twitter account. And our Facebook page gets an average weekly series of visits in the 9,000 area. And both on Twitter and Facebook, you will find seminars, special events, announcements, as well as very basic disclosures that are coming out directly to the public. So in addition to what you might see on a broker-dealer's trading panel, you're also going to get a few of the information directly sent to you. Perhaps the largest, program that we did last year in terms of ensuring that there would be enough stock supply in the market was completing or reinstating something called the minimum public float requirement. What happens in the Philippines is that there's a requirement to have 10% of your capital publicly floated on the exchange. Interestingly enough, through 2007 or through 2008, with the great financial crisis and a lot of requests to buy back stock from companies, the exchange actually suspended the rule. And what happened was that a lot of companies, quite correctly, were buying back their own stock, believing in terms of the value, saying that it was undervalued. Well, lo and behold, by the end of 2011, about 47 firms, or about roughly 18% of our listed companies at that point in time, had public floats less than 10%, which obviously did not jive well with our requirement. I must say that the reinstatement of the rule has, both from a corporate governance as well as a basic stock exchange activity, been quite successful. If we take a look, right now there are, I think, only 6 firms which have not complied with the rule and are probably trying to figure out a way how to comply or delist before the June deadline. In terms of other corporate governance issues, we have actually launched a separate company called Capital Markets Integrity Corporation. This is actually the watchdog for looking over the shoulders of broker-dealers in terms of being, let's call it, the internal policeman. So that's now a separate independent company directly under the SEC, although it's a PSE which funds it. And we've also instituted our Bell Awards, and these are corporate governance highlights such that companies which are actually performing in a manner wherein they breach corporate governance standards, not just of the SEC, but also the PSE, and are perhaps looking at global standards, are actually recognized. And we're also recognizing some of the broker-dealers along with this. Now, finally, I mentioned the increase in our average daily turnover. This actually has also been a function also of the longer trading hours that we have promulgated on the exchange. We used to be one of the few exchanges left in the world that only, I guess, officially traded in the morning. We've now extended our hours up to 3:30 p.m., and I think the direct correlation with volumes, values increasing, as well as maybe the increase in activity on the exchange, has been a result of this, and you see that in the lower bar chart. Now, how important is the stock market, the mining subsector to the rest of the stock market? If you take a look at this graph, we actually have a subsector called the oil and mining index, and it's represented by that, I guess, that purple line on top. What it tells you is that on a risk-adjusted basis over time, since 2009, the mining and oil sector have actually outperformed the PSEI and has essentially outperformed every other sector in representing companies in the Philippine Stock Exchange, which tells me that it's a very important sector of our economy, and certainly a very important sector as far as the Philippine Stock Exchange is concerned. I think you know this, that there are actually 17 mining companies listed on the exchange. And actually 2 of these companies are currently in our 30-company PSE index and account for a combined weight of about 3%. As of end January of this year, 2013, our listed mining companies have a market capitalization of about 416 billion pesos, which is roughly around 12% higher than the year-end before. As you know, the mining sector has been, I guess, as a sector within the Philippines, has been, I guess, relatively underperformed last year. Now, the average daily trading value for the mining sector is also up by about some 8% year to date. Now, consistent with the overall government policy to develop the mining industry, the Philippine Stock Exchange has implemented a few programs which I think will benefit the subsector. And the idea is obviously to help list and raise capital in the stock market. Now, under this strategic initiative, the exchange adopted a more liberal interpretation of the listing rules to allow mining firms to list without compelling them to meet the stringent track record requirement of profitability of operations and operating history requirements. Now, these relaxed rules apply mainly to mining firms whose activities are limited to exploration. So in lieu of the track record and operating history requirements, the firms are required to secure just additional documentary evidence, obviously for us to inform investors. We hope that this would entice companies to list, given the capital-intensive nature of the business. Now, along this initiative, we also continue to have listing seminars, which are specifically focused to mining firms, looking at raising capital and funding projects through the stock market. As you may know, also, that in 2008, we adopted the PMRC, which is patterned after the Australia's JORC. And we do hope that with this, the minimum standards, recommendations, and guidelines for public reporting of exploration results, mineral resources, and/or reserves are essentially standardized, and obviously give the transparency level required for our mining companies to be understood by the investing public. Now, this code is applicable to all, solid minerals, including industrial minerals and coal, for which public reporting of exploration results, mineral resources, and/or reserves are required by the PSE. Now, what's our outlook for the sector? You may actually have a different view on this, but we actually think that the outlook on the sector today will be dictated by the movement of commodities in the international market. And we think because of that, that current demand will be relatively subdued because of the issues in the global economy. So except for gold, which is considered a safe haven, I guess, in times of crisis, demand for metals will be, I guess, up and down, depending on the economic uncertainties that are faced. So I guess to be specific, as we see the issues of China, we think that even with the soft landing, this will continue to weigh on the price of copper, since China is one of the largest consumer of copper. If I have the number right, it's about 40% of global production. And we think there's a disadvantage for our current miners because of the Chinese market for copper exports. Now, of course, even with this relatively subdued outlook, we believe it's an opportune time for new mining areas to be developed as the global economy recovers. So clearly, as the global economy recovers, and given the time lag for a lot of these production facilities to be done, that once the global economy is up and running to full speed, then I guess we will be able to reap the rewards of such increased demand. Now, one of the studies that we've seen is that with the development of more mines, the Philippine government estimates that revenues from mining should reach about US $8 billion by 2016, and something like about a $12 billion US number every year for 20 years, beginning in 2018. Not sure if you agree with those. But last but not least, we think that the performance of the mining sector is obviously going to be impacted by the, the latest interpretation and, I guess, the implementation of the Executive Order 79. So we're cognizant of the challenges in the mining sector, and I think we know that, I guess, globally, the mining sector is probably hounded by the same items of challenges and risks. Outlined here is something which Ernst & Young have outlined, And these challenges usually, I guess, stand out across geographies. So it's not just the Philippines, but everywhere else. And these are resource nationalism, access to capital, infrastructure, cost inflation, and skills shortage. The resource nationalism problem is perhaps most persistent here in the country. As mentioned, EO 79 is seeking to establish a more equitable revenue sharing scheme with the government. Now, with the issuance of the executive order, it's the preparation, I guess, for this new mining reform bill. But I guess the moratorium of the issuance of new mining permits being imposed until the passage of this reform bill has put at least a stop temporarily to some of these new initiatives. The Mining Industry Coordinating Council, which is tasked to supervise drafting the bill, is looking at two options to achieve this fair revenue sharing scheme. One is to take a percentage of mining companies' gross margin or take a portion of their revenue after taking away income tax paid and computing the share of government. Now, being a capital-intensive industry, the issue of access to capital may not be unique to the mining industry, but it's certainly, again, perhaps a bottleneck in many cases. And I think the history of the Philippines in terms of the ability to provide the appropriate amounts of capital, the appropriate forms of capital, as well as the speed and duration for bringing capital into mining sectors is something that needs to be reviewed and, I guess, helped along as we move forward. So it's not a surprise when some companies list in Australia, list in Toronto, or even the AIM exchange in London to try and address some of these issues that have been mentioned. I guess cost inflation is something that is, again, might be today at least unique to the mining industry when you talk about specific inputs, and certainly that is an operating risk. And when we talk about skill shortage, I think that the OFW trend, the overseas foreign worker trend, wherein the Philippines tends to export a lot of its semi-skilled and skilled workers, certainly contribute to a diminishing number of available skilled laborers here in the Philippines, including the mining sector. I guess finally, safety standards, while being addressed by organized mining and responsible mining firms, is an issue that is probably not addressed by the illegal miners, and that creates actually a worse situation for the industry as a whole, because then the mining sector is viewed as one that's being irresponsible as a whole, again, without making distinction between what companies who are responsible are actually doing today. I'd like to mention that I guess in 2012, the capital raised in this mining subsector in the Philippines is about 1.9 billion pesos, which actually is a lot smaller than what was raised in 2011. That year, about 3.5 billion pesos were raised for the mining sector. Interestingly enough, I'm sure those of you who are mining operators will probably argue that you have a lot of regulatory constraints. Now, it's something not unique, and I argue, perhaps as an economist, as a former investment banker, that the stock exchange faces exactly the same type of constraints. And we've always tried to argue for maybe an update to our antiquated regulatory systems, and looking at perhaps a wider leeway in terms of regulatory framework, such that getting from point A to B to C from an operational standpoint does not require you to go to the various, let's say, agencies and regulatory agencies to get approvals. It's something that we share, and something that's common to the PSE and how we're actually regulated. So, it's a topic that I can talk on for hours, but I won't. Anyway, the point I was going to make is that even President Noynoy Aquino said in his first State of the Nation address that, and I quote, "Growth will only be possible if we streamline processes to make them predictable, reliable, and efficient for those who want to invest. And it's something that we at the Stock Exchange actually support. And we are, as an advocacy, trying to work with the SEC and hopefully with the other regulatory agencies in the government to try and maybe reduce the number of types of regulations, but perhaps give a larger box for companies to operate under. Maybe finally, talking about the economic outlook for 2013, we do share the view that economic growth this year will be relatively robust at over a 6% level. And we think there are many opportunities in terms of this growth. We also think, by the way, that our investment grade status is perhaps around the corner, although I think personally that it is not going to come in the first half of the year. It is going to come in the second half of the year. And it's important to note that the investment grade status, while just a number in terms of the rating agencies' grading system, but is a very important number as far as the macroeconomy and how we stack up against other countries and how we stack up against the views and perception of various investors, including a lot of these portfolio investors. I just came back from Tokyo. We talked to about 41 different institutional investors. And one of the interesting things, if I may take away from that, is that, let's call it Japan Inc. is basically an investment grade only investor country. And while they've been able to put a small amount of their investable funds in what they call discretionary levels, until we get to the investment grade status, this is a type of thing that will actually generate a further inflow of funds, not just from Japan Inc., but certainly from a global series of investors that are investment grade only investors. So I must say, though, that it should be good to note that if you take a look at the financial trading data, the implied rating of the Philippines is already investment grade. And I say that when we take a look at what we call the credit default swaps. We actually trade inside or under credit default swaps of Indonesia and Brazil, two investment grade countries. And when our national government goes out to borrow, they have now done 10-year Republic of the Philippines US dollar bonds at a spread that, and also a nominal, I would say, a nominal yield that is about half of what some of the Eurozone countries have raised money at, including, by the way, former mother country Spain. So that particular deal, we had about a 3.9% yield for Republic of the Philippines bond deal for 10 years. Spain did something closer to 7%, so a reversal of fortunes over the centuries, I guess. And for those of you who are thinking of the stock exchange as a method for raising capital, I would be remiss if I did not do some advertising. Please do consider the stock exchange as one of your fundraising alternatives. If you do qualify, we do IPOs, follow-on offerings, and the like. And I think that we can have various conversations with specific firms, and we have a team actually trying to help all these companies interested in what's happening on the stock exchange to actually either get yourself listed or to utilize the stock exchange for further fundraising. And so finally, I would say that, and I thank you again for having me here, because one of the things that the PSE does is try and work with all stakeholders in terms of trying to improve not just how we operate as a firm, but how we can help promote the various subsectors that actually contribute to the, and do the hard work in reality for why the index is flourishing today. And so with that, I guess I'll stop here and say have a good afternoon and good to see everyone. Thank you.
Hans, what would you regard as the top 3 reasons for the robust performance of the PSE to date? By the way, you're not allowed to say that one of the reasons is because they made me the president. So what are the top 3 reasons that you consider for the robust performance of the PSE?
Okay, I think First of all, we've had, I think one of the fundamentals that our monetary policy and the ability of the Banco Central to actually have inflation targeting has been done very well over the past few years, such that we now have a yield curve that's relatively low, and interest rates that are, quite honestly, not just nominally low, but also real interest rates which are extremely low. So I think that would be the first reason. I think the second reason would be that there's a strong perception of all investors, local and foreign, that the governance in this country, as well as underlying corporate governance, has improved tremendously over the last 2 years. This is a very important part of that equation. And I say that, by the way, when I talk about both local and foreign investors, that if you take a look at the activity on the exchange, last year, on average, for every day of trading, about 55% of that value, including incremental amounts, was actually contributed by local institutional and retail investors. And foreign investors only accounted for 45%. Today, actually, this February, is closer to a 51-49 breakdown, but still the local investors, local institutional and retail investors are the ones driving this whole, I guess, if you may call it, confidence level. Maybe the third one is that, which is quite important as well, is that companies that are listed have actually demonstrated maybe a very uncanny, but certainly a very good performance level